if you were short and leaning towards the downside as the market was falling apart and as the narrative out in the media was that Trump doesn't know what he's doing and, adding tariffs like crazy across the board and Australia and China, and then China retaliates, and then they retaliate again, and all of this, and you're like, oh no, and the bond market falling apart, the bubble bursting, oh my God, hold on to your shorts, right? Literally, hold on. And you went short without a plan, what are you doing? Why would you do that? Because I don't teach that here. So if you're brand new and you got stuck going down, and the markets flipped to the upside and you got stuck in some trades that now are almost worthless and you did not have a plan for this move to the upside, I suggest you stop trading for a little while and follow the methodology that we teach here. You do not trade without a setup. You do not trade without a confirmation of that setup. Somebody help Dan C, please. And as I've been teaching for months and months and months and months and months, if the narrative is a continuation to the downside for a correction, you go longer term out as price levels hit and breach certain points, test, retest, fail. You do that more longer term, like 2 to 3 weeks out, but then you short term hedge to the upside, just in case something like this happens. If you're in a long trend, or at least a move that is a corrective move or a rebound move like this, and you lean into next week's expiration, then the front week you should have a hedge with some puts. Something that, just in case it flipped this way, you have some protection. Now, when it's trending like this, the only time that you need a hedge if you are long the market in a long trend, the only time that you need a hedge at that point is if you are over allocated, or there's the potential on these pullbacks of a reversal. Something's up. News, there's CPI coming out, a Fed announcement, right? Something going to happen here that could potentially jeopardize your long position. Then you can hedge. So if there's an event coming, if you've decided on a Friday, or Thursday or a Friday, you know what? I'm holding to next week, even though things are a little shaky. And if you're going to hold that long position, then you're going to want to hedge for the following week. If you've got monthly expiration, you're going to want to hedge for the following week. But you only do that in a long trend for protection, just to protect, your allocation. If the market is long like this, and you have a couple of trades on, just a couple of pilot positions, do you need to put on a hedge? If you got 2 pilot positions, you're just dipping your toe in the water over here for something, maybe some continuation trade. Do you need to hedge? Your allo is like 140 to 160. So you have one trade on for 110 and one trade on for 100. You got $210 at risk. Do you need a hedge? No, but if it starts to take off and you add to the trade, now you got, 210, and then you add maybe another allocation, another trade that goes out monthly. Now you've got a little bit more than what you normally have, right? You got maybe 400 something, 400 plus, which is like 3 times your allo. Then it might be a good idea to just take $50 and buy, whatever you want to buy. Buy an SQQQ call, just in case the market rolls over. This is the inverse of the Qs. 50 cents, about 10% of what your total allo is, your total exposure is. If this thing ends up giving you a triple or a quadruple like today, you make 150 to $200 and you get out with 50% loss, you're even, right? So there are times to hedge when you're in a long trend. Same when you're in a short trend. The markets are rolling over in a bear market like this. Now there's a little bit more reason in a in this kind of downward trend to possibly place hedges on the way up. Because what you'll notice is on the way down, the swings to the upside are quite violent. Like on the way down here, look at this. Like whoop, look at this. Whoop, whoop, down here, and then whoop. Look at this. Closed here, opened here, went whoop. Right? So when the market is heading down, the pullbacks are quite violent. But when the market is trending up, the pullbacks are less. Have you guys noticed that? They're just little pullbacks on the way. They're like little steps on the way up. But on the way down, when the markets are really free falling, these moves to the upside can be really incredible. So it's a good idea in a downward trend to have hedges along the way, especially if you are putting trades out, say 2 weeks out, doing some monthly. You're going to want to have some hedges here. And all the hedge is the opposite trade. Yeah, ergo today. Exactly. Now, a couple of people said, oh, but I put on the shorts, but I didn't have time to get into the hedge, or the hedge didn't fill. Well, then you should take the short trade off, or make sure that you do get a fill. I mean, literally, it's like taking your car into a crazy traffic jam in California, leaving the house, but you forgot, to make your insurance payment, and you got a really nice car. Too much risk. Way too much risk. And there's many ways of doing it, and I'm not going to get into the ways of doing it here because we've talked about it. If let's say you're long NVIDIA, what are some of the ways that you could, hedge that? Well, you could do SMH. You could even do, you could even do, if SPY puts are cheap enough, you could use the SPY. You could even find another semiconductor, like equally as inexpensive, like MU. Let's a different scenario here. What if you were long Avgo? Now, Avgo is a fairly expensive stock. Well, then you could put on an MU put just in case. They usually kind of all move together, but these are a lot less expensive than this. So you wouldn't like buy Avgo and then short with Avgo. That doesn't make sense. Cancels each other out. More of expensive long position, you would take a less expensive short position and just put this on. And if this was for, say, a monthly position to the upside, these puts would be just for weekly insurance. Does SQQQ hedge pay enough protection? Well, it certainly did today because we got them for about 95 cents and we were closing them out at like 350, 380, $4. So this was a 4x trade, which I'm going to get into in a minute, that more than made up the difference. So yes, it can. If you have a huge move, you can. Absolutely. But why would you go short today? We weren't short today, Ken. We were short from earlier in the week. We put the shorts on earlier in the week. I'm going to get to that in a minute. Yeah, I guess I don't understand the question. Unless it's more, like, why would anybody short today? Like that kind of thing. Well, some people might. Yeah. No, I know what you mean now. I mean, they might. I mean, why not? You're in a downward trend. I mean, I shorted yesterday, and the only reason not to short today is because there were some events happening, and there was a bond auction today, which might have cleaned things up. We were also waiting for the China deal to come through, right? So I wasn't going to add anything because. And then, yeah, Jimmy, Trump said in a tweet this morning it'd be a good time to buy. Yeah, tell me he doesn't know what he's doing. It's all a negotiation, which I think is necessary because most presidents, with very few exceptions, want to negotiate, want to meet with other leaders of other countries and actually negotiate because they always have to check with their party so, that they don't get, screamed at, pushed out, whatever, upset, their party. But Trump doesn't care and he loves to negotiate. And we'll see what happens. This could all blow up and be absolutely terrible. But we don't know. All I know is that on the narrative side of it, China was the big, you know, kind of obstacle here. I've been choking all night. China was really the big obstacle, and they're not playing ball. And so the game here is let's get all the other countries. We'll tariff all of them. We'll do reciprocal tariffs on everybody, plus the 10%, and see who comes to the table. And so if they come to the table, and they come to the table, and they come to the table, and they come to the table, but China doesn't, China retaliates instead, who looks like the bad guy? I'm just asking you, who looks like the bad guy here? These countries that know that they've been ripping us off for decades are finally coming to the table and realizing, whether it's the EU or whatever, that Japan, South Korea, Vietnam, India, you know what? We'll play ball. Let's renegotiate and let's open up some other things, other products that, we can send you, other products you can send us, maybe some joint security and all that kind of stuff, right? There's a lot more than just tariffs going on here. A lot more than just trade going on here. But now China is becoming isolated. They look like the bad guy because they are retaliating and no one else really is. Because we can outlast them. Now, can we outlast China? Some might say no. But they export 5 times what we export. I think we might be able to outlast them. Plus, their economy is in rough shape. They just had to issue stimulus, so they spent a bunch of money. They dumped some of our bonds. Now they have no place to put the cash. It's all part of a negotiation. Anyway, the main point here is, so what? As a trader, we don't put on trades with emotion. We don't put on trades based on swings, right? We don't just place trades because it's going down and then jump on the bandwagon this way. And we don't do that. So there's a big difference between placing trades and, dare I say, copying trades, meaning my alerts, and actually endeavoring to becoming a trader. Someone who knows the markets, someone who works with a setup, a confirmation, and actually has a plan to trade. If you shorted without a plan to hedge in this volatile market, you didn't have a plan. If you jumped into the long side or the short side without a setup and didn't have a confirmation, then you're just either gambling or copying trades. And there is a difference between copying trades and being an actual trader, which is what we try to teach here.
Thanks for watching. Hope you enjoyed this video from Trade With Me Now. Make sure to go ahead and like this video and subscribe to our channel so you make sure that you catch our next video right when it's released. Also, if you have a question or comment, please leave that in the comment section below. And of course, if you want to learn more about Trade With Me Now or join our community of profitable traders, go to tradewithmenow.com. There's also a link in the description below.